What's up, traders? Welcome back. Yes, back to another video. Today is going to be a quick, simple breakdown of a video that of a trade that I took in the PM and the AM session yesterday, and I'm just going to be simply breaking it down for you guys. And it's personally, I didn't take the trade, but obviously I'm going to be breaking down the whole trade idea and how everything went. So if we start off from the daily time frame, you can see that primarily we had made all-time highs at this level, and I didn't expect price to at least go back to that level, and we had a new week opening gap here. And if I'm to look back at YM as well, I noticed that if you look at YM made a huge dump below the new week opening gap. Like, it was really way below, as well as Nasdaq. Why am I giving reference to these assets? It's because they move in correlation with Nasdaq as well. So that is why when I look at the S&P and the YM yesterday, I noticed that they all had made a deep run below the new week opening gap. And the way I look at it is that just the YM and ES literally tell you what the Nasdaq is going to do. Okay, one of them will tell you, actually tells me what the correlating asset is going to do. So one of the assets, depending on how it's playing out, will play according to what YM is, however they may correlate on that day. So that is why I looked at the YM and the S&P, and I noticed they had made a deep delve below the new week opening gap. So going into Nasdaq that day, I did anticipate for price to as well make a shallow run. Particularly, I was anticipating for price to get back to this level, this high. This was a previous high that we've run, and I expected for price to come back here. And you can see that throughout the day, price really did get back to this level. So moving on to the 4-hour time frame, you can see how price really did clearly reach that level. But my anticipation was for price to get back to the new week opening gap and at least fill it fully. So that was what I was anticipating coming into the session. Now I know this is going to be counteract to what how my entry was later on, but I'm going to explain it further so that you guys can understand properly. So coming into the 4-hour time frame, we can see that we took out these lows. Remember, I'm still bearish on this to get to the new week opening gap. So we get back through this low. Notice how the body displaces that low. That was immediate confirmation for me to keep going lower. And in addition to that, you can see how price kept on respecting bearish PD arrays without displacing them really. So that was what I looked at, and that is the thing that gave me confirmation. If we go down to the 1-hour time frame, it's the same confirmation but a little bit much clearer. So coming into the New York 1-hour session, this is where I now started to really look at what price was doing, because I noticed that prior to the session, let's just remove this because I don't need it. So prior to the session, I noticed that we had gotten into the upper quadrant level of the new week opening gap. If we can measure, we can see that this is indeed the upper quadrant of the new week opening gap, and if we're bearish, we want to see price trade below that. Another thing is the way I trade, I don't necessarily need price to move thousands of points in my direction. I'm just here to get a piece of the pie and move on, because I don't have to be here for the rest of, the day. So that is how now I noticed that prior to the open, we traded back into this upper quadrant level of the new week opening gap, and then we pushed up. So dropping down to the 15-minute time frame, I noticed that we had now started creating a minor tight range prior to the new week opening session. Now this is something, a play in my playbooks, my trading playbooks, that I have gotten to learn, that if we have a minor tight range prior to the New York open session, all I have to do is wait for manipulation in relation to the high time frame draw. So again, I came from a high time frame thinking and having a clear draw on bearish liquidity, but at the same time, I'm not here to get 1,000 points. I'm just here to get a piece of the pie. So if that piece of the pie means that the liquidity that we need is resting above here, then I'm definitely going to seek for price to get to that level. So after seeing that, I noticed that these highs were very, 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 very smooth. It was not something that you could ignore. So all I had to do was, after we saw price trade to the upper quadrant level of the new week opening gap, that was when price now made notice this inversion fair value gap. If we can mark it out, it was a bearish, it was a inversion CB, and you can see how price traded back into that without the displacement. Notice where the bodies are closing, and we also get a manipulation of this range that we can see here. So you see how we have that manipulation right before the New York Open, and then immediately at the New York Open we have that tight range get manipulated. You notice the bodies as well. That's something that really gives me intel. So initially I came into the session bearish, but I noticed that we had a lot of liquidity that we could run here before we could actually proceed back down like I anticipated. So after seeing that manipulation at market open, I noticed that we had very smooth highs. ICT has always showed us that if we have smooth areas that have been made jagged, the next thing is to look for the opposing liquidity with smooth areas, because smart money is not going to want to leave smooth areas of liquidity just resting above. They're going to run them and then use that liquidity to fuel into the direction that they actually want to draw price into. So of course, dropping into the 1 hour time frame, 1 minute time frame, sorry, we can see that we have that manipulation here, at the tight range created here, and notice at market open. Now my draw for that trading session was the pre-session highs as well as the clean highs that were resting above here. So even if we didn't get to London session highs, I was okay with getting out at the pre-session highs as well as the clean highs that were above the pre-session highs. Something that I should add as well is, whenever I trade, I always want to make sure that I'm below the midnight opening price. At least if I can't get below the 8:30 opening price, I make sure that if I'm bullish, I want to see price trade below the midnight opening price. Sometimes price really does get to the midnight opening price, but that wasn't my objective for the day because I was focused on price getting lower for the rest of the day. So this is my clear liquidity that I had. I had marked out these highs as well as these highs, and this is the perfect for me. This is what I call an A+ setup for me, because it's something that I've seen in my playbook. I have backtested this a lot. I have learned a lot about it, and this is an A+ setup for me, where we have a tight range, we manipulate in the opposite direction of a range, and then we disperse liquidity oppositely. So that is exactly what I saw. Market open, we had the manipulation of these smooth flows, as you can see, and then we made this inversion, but that wasn't my concern. My entries always occur from the first presentation fair value gap, which is here. So when we had the first presentation fair value gap, all I had to do was wait for the manipulation to occur and then for price to bullishly close above the first presentation fair value gap. So that was what I wanted, and my entry was set at the fair value gap here, because whenever I backtested, I found out the price always makes it, not always really, but makes it reference 90% of the time back to the first presentation fair value gap. However, today was not really that day, and yeah, I just had my buy limits that were set in place, and I had my buy limits that were set in place, but unfortunately, price didn't really come back, and it just shot to my liquidity levels. I don't really care what happened throughout the session, because once I saw that this liquidity was rated, my first hanging fruit was rated, it makes the trade idea less probable for me, because I mean, the liquidity has already been taken. So I was still willing, obviously, to take a position, but after running out these highs and getting back into the low, this was the low that we had taken on the 1 hour time frame, the one that we displaced. So that line is here. So you notice that even if we had come back here, I was still going to want to see price trade back to the first presentation fair value gap, which it didn't really trade to the first presentation fair value gap again as I wanted it initially. And because I have a time window for whenever I trade, so my trade window ends at 11. It only extends to 11:10 when I'm already in the trade. So that's the macro session that I'm allowing. So but by 11 you can see we didn't have even a retracement back to the first presentation fair value gap, and the first presentation fair value gap was made reference back to in the afternoon session, which is not a session that I trade because my focus is on the AM session for the New York time zone. So this is just one of those moments that has taught me so much about patience and sitting on my hands. One of the things that trading will teach you is a lot of patience. So you have to be able to nurture that patience, nurture the circumstances that teach you more. about your patience, called me honestly, would have just jumped in and said, F it, let me just enter for a long position. And then I would have found myself in that consolidating phase that happened throughout the morning session for the day. So you can see from 10 a.m. to almost 11 a.m. we just consolidated and we're just in a tight range. So my model honestly is quite simple. I just trade the first presentation for value gap, be it reversed or inverted. And honestly, if price, that's one rule that I have, if price doesn't return to it, that's fine by me. It's not going to be a trading there for me because I'm not going to be here to catch every move. So I know that the market will always give me opportunities and I don't want to fret about just one small opportunity. It adds up here, but at the same time, I'm also working on my psychology. So I'm not here to just violate my rules. And yeah, despite the fact that price traded to the level that I actually wanted price to go to, my edge didn't form, my edge was not triggered, and I kind of felt frustrated a bit. But at the end of the tunnel, you have to look and see that you're learning more about being patient, so that small moves do not really trip you off your feet. So my goal is not to make every single day a trading day, but to make every single day where my edge forms a trading day. That's my motion. So if you're working on your discipline, your psychology, always remember that when you miss a move, it's not a mistake. The mistake comes from when you break your rules, and that's where you start to spiral, in it. So that was just my trade recap for the day. I really learned a lot about patience, and thank you guys for watching. And as always, I hope that you guys trade your plan and not your feelings, because if you're a trader, you're gonna be here for the long run. So that's pretty much it for today, and I hope I'll see you guys in the next one. So peace and love.